Good morning, traders. It's Tuesday, June 23rd. We got some big price action today. Today, I'm going to talk about the NASDAQ dropping over 3%, the US dollar breaking out, primed for about an 8 or 9% rally, gold on the verge of a 13% sell-off to 3,600, silver on the verge of breaking down to $40 per ounce, which is a 35% haircut, and SpaceX shares on the verge of blowing up. Taking a look at the charts, we got some selling going on this morning, which we have kind of been feeling and noticing the little bit of decouple going on in certain sectors and assets. More or less, we got the equities markets down about 1.4%, all the way down to almost 3% for the NASDAQ. You can see the S&P 500 daily chart here pulling back and dropping down. If we take a look over at the NASDAQ, we've got a bigger drop down almost 3%. And if we were to look at the 10-minute chart and just draw a line here, we've got 2977, 2977. So we have the NASDAQ on the 30-minute chart going to fill this big gap. We had this great big 2% gap over here. We had another big gap up over here. These gaps to the upside keep getting sold off. And now we're going to see the market down and fill this great big gap that we saw a couple sessions ago. So overall, things are moving as expected. Pops and drops. We're seeing bouts of selling. We're seeing technology get hit, waves of selling. We're seeing money move into defensive sectors a little bit. Utilities have been holding up, and while it doesn't look like a very strong sector, it is secretly building strength and accumulating money. Same with the real estate ETF. It has been doing the same thing. Although it's been trading sideways during sell-offs in the equities market, we tend to see money flowing into this spot. So overall, we are seeing some weakness across the board. Let's take a look at SpaceX real quick. Big move down, 3 days up, 3 days down. Today it's set to open relatively flat from yesterday's close, maybe down a little bit. Overall, it has had the run up. It's now fizzling out, and it's at a point here where anybody who got in after the IPO is pretty much underwater and losing money. And so naturally, people who are piling in late, which I did get in late, although I controlled it with profit targets and stops, those who got in late and don't do any of those things are now going to be under pressure and start to feel like they need to sell. And unfortunately, though, it feels like the whole world, everybody is piled into SpaceX. And if they already own shares, that means they're going to probably want to start to sell when it starts to go against them. And it's going to leave a really bad taste in most people's mouths in terms of the IPO. People finally, for the first time, got into an IPO through their broker, millions of people, I think. And now they're going to realize, hey, it was up huge. It felt amazing, but then kind of greed kicks in, no protective rules in place. It turns into a loss, and now they're going to lose money on an IPO, and they're going to hate them. And then we got OpenAI, and then we got Anthropic coming out with IPOs. The SpaceX one could have totally been the nail in the coffin in terms of getting everybody excited about it, IPOs, and then suddenly OpenAI and Anthropic are literally walking into the perfect storm. People don't trust IPOs. There's no data to run with. It is just kind of a, for lack of terms, kind of a pump up and then kind of a dump in shares. So anyways, lots of price action going on here in the market. Today, we are seeing the dollar have another big push higher. Let's take a look at the dollar. Dollar is really starting to extend and push higher. If we go and zoom out on this chart a little bit here, we can see this is that key breakout zone that we've been talking about, with the dollar getting up through this area and starting to really extend and move higher. And if this keeps moving up, there is potential for the US dollar to have a very strong rally up to 109, 110. In fact, it could go all the way up to 121 or so, but that is a big target a long ways away. Overall, if the dollar goes up, we're going to continue to see metals get hit. If I could ask you a favor to help out, if you like the content I share and you want to support the channel for free, a simple way to do this is to just hit the subscribe button. My commitment to you is to try to put out more content that's educational, that's actionable. I do read your feedback. Please subscribe if you like what I do here and share it. And thanks so much. In most cases, we do have gold down 1.6%, picking up speed, coming right back down into support. It is trying to hold, but can it hold? That is the question. And based on the charts, it doesn't look like it's going to hold. It looks like the dollar is going higher, stocks are going lower, metals are going lower at this point. If we take a look at silver, down 5.5%, testing critical support. It is on that threshold of breaking down. And of course, we're probably going to see miners get hit really hard today. Now, miners have been holding up more. They are holding up more so, kind of like the energy space where we saw oil break down, yet energy stocks are holding support. Well, this is kind of the same. We've got gold and silver testing support more or less on the verge of breaking down, and mining stocks are holding up quite a bit higher than the previous low. And that's simply because investors like to cling on and hold on to hope. They hope their stock is going to go up. They hold it, and then eventually, if metals break down, we will see eventually the bottom probably drop out in miners and see a very precipitous fall. It'll be just something like this, right? We're kind of in this little bit of a bounce or pause phase, and eventually it could just drop. And you start to get these huge gaps and these flush downs. So that's kind of where we're at. Very critical point for most things. The stock market at resistance, seeming to get sold off into. What is interesting here is we have the exchange traded fund market in the US is attracting record-breaking cash. It's on pace for $1 trillion. What is it? It's $1.5 trillion flowing in. Vanguard Fund has already raked in roughly $110 billion. Money is pouring into the stock market like it's going out of style. And we have been seeing small caps and micro caps with big volume. Let's go look at the micro caps. These are the little things we need to pay attention to. We have these waves of investors piling into small caps. We got the whole world moved into SpaceX thinking it's going to $500. We've got technology, Micron. We've got the DRAM, like all of the AI related stocks and stuff are going ballistic. Everybody's buying them. They're showing all of that feeding frenzy. And so people are piling into ETFs and stocks. This is typically what happens. The stock market has this big performance move. It sucks, gets everybody sucked into the market, thinking it's going higher just before it starts to put in a major peak. So let's just take a look. I believe we are somewhere when it comes to kind of the AI bubble. I feel like we are over here. When it comes to the precious metal space is like over here. It's already had its early peak and is on the verge of starting a much bigger sell-off. The stock market in general is kind of, I believe, putting in somewhat of a significant high as well. Again, we just need to let the markets unfold, but we have all these scenarios. And right now we're in this euphoric phase where everybody's piling in to, we are seeing the technology space, small caps, micro caps, and really just ETFs in general. People just want to get in because everything's had big moves and everybody wants to be part of it. And I think it's a little late to the game for that. So we are close to a lot of annihilation once this market does roll over. I have been saying that for a long time. And of course, the market just keeps dragging higher, and we do keep riding it up with fresh new trades as the market breaks out. One of these times, though, and it feels like we are getting very close with what is going on with the IPOs and all of this stuff. We are very close to, I think, the beginning of the end. So let's just look at the stock market cycles really quick. Precious metals look to have had their blow-off move already this year. Energy, we just had the whole war thing. We just had energy stocks skyrocket. They have just outperformed and done exceptionally well. Industrial capital goods have been doing well. Everybody seems to be buying and upgrading. Unfortunately, I think a lot of companies are spending huge money upgrading facilities and all of that stuff, thinking business is going to keep going. Little do they know, I think we're at a major top, and going into a recession, they will have just spent millions or billions of dollars upgrading, and then demand just drops off as we go into some type of recession when this falls over. So all of these things are coming to light and happening, and some of them have already happened. Now, this is the important part here. This is the innovation and adaptation phase. This is, if you look on the stock market cycle, it shows that it happens right kind of near this market peak. But this is the economic phase. We have AI, everybody's implementing it. Money is being spent, trillions of dollars being spent on data centers and AI and all of that stuff. It is just a feeding frenzy. Throw the word AI out there and ask for investment capital and you will get it. That is not a good sign. Most of these companies, there's 1 million AI companies now, all offering different services. Are they making money? I don't know. There's so many of them. It's flooded right away. Everybody went for quick, easy money. And so there's 1 million companies all trying to make quick, easy money. And it is a flooded space. Probably a year or two from now, most of those little AI companies will be gone. Those services, if they don't keep up, they're going to be behind the ball. And really the market leaders will start to really shine. So this is kind of where we are. We're coming into this phase. The economic cycle is going to potentially continue to stretch with all the spending going on, helping keep things kind of going. But overall, the stock market, the value of assets are getting close to peaking. Let's go take a quick look over at Bitcoin. We do have Bitcoin trading down about 3.4% this morning. It has this little bear flag. It does look bearish. Again, the overall trend is down with the 150-day moving average sloping down. All of the other moving averages are sloping down and layered bearishly. This could be seen as a little bear flag. It could drag out to become something longer, like some of these other ones here where they took several months to unfold. But overall, the bias is to the downside. If the stock market starts to roll over, and all of that, we're probably going to see Bitcoin break down and sell off. And the next stop for that is around 51,000, something like that. Let's take a quick look at the other metals. We got platinum and palladium. We do have these other kind of breakdown zones here. We already saw platinum break down, kind of give a little kiss goodbye to that resistance level, and it is already starting to make some multi-month lows. If we take a look over at palladium, similar scenario, it has already broken down through this level, and it broke down, it came up, gave a little kiss goodbye, and it is starting to sell off as well. So we are seeing pretty much precious metals starting, they're already breaking down these ones, but gold and silver have that investor sentiment. They have hope, right? They're hoping it's not going to break down. People are holding on to them, accumulating at support, just expecting at any point they're going to rebound and go higher. But overall, when it does start to break down, there'll be a lot of people letting loose their shares or buying or selling their ounces. And we'll probably see a very sharp drop as it breaks a lot of people's expectations. But we have been expecting lower metal pricing for many months. The charts have been telling us that. We have the long-term mixed signals for metals, which is why we're not involved. Again, we ended up closing out our gold right up here. We closed out our silver way up here at 111. And now we are just letting it work itself out, potentially all the way down to the 40 level, which is obviously a 63% haircut. We are only, depending on silver moves, we are only like 4 or 5 days away potentially of silver crashing and hitting that. Now, I think it might take a lot longer to get down there, but silver moves very quickly. This is a very critical support level right through here. And there's a lot of money that really piled in through this entire phase. The longer something trades in a pattern, the more shares of people are positioned believing it's going to go higher. And when that is broken, we can see a lot of that selling kick in, and we can see what silver does. Silver can pretty much take a bungee jump plunge straight down very quickly. So that is what is possible, and we just need to be aware of. If we go take a look at the hot list, we still do have semiconductors, technology, hack, blockchain. Like these are all at the top of the list still. Down at the bottom are more so the resources. Not that long ago, early this year, it was all these resource stocks were at the top, and technology was more so underperforming. It was still doing well, but wasn't at the top. Now we have pretty much all of the core things. We got silver, Bitcoin, uranium. We even have the oil holders. We got gold miners and gold, silver miners, energy explorers, marijuana. We have a lot of those all down at the bottom here, showing signs of weakness. Money is definitely not looking to get into resources. It wants to get into memory stocks, right? And so that's just, we got a lot of sector rotation going on. Anyways, that's it for today. We'll see how things unfold and take it one bar at a time. Take care. Bye-bye.